Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. It is currently Wednesday, June 4th. As you know, I did an extensive market newsletter technical analysis on Sunday, so I'm going to give you an intra-week update. As far as the market, major indexes up are about 1% for the S&P, 1.8% for the NASDAQ. Precious metals have had a great week, gold, silver, and of course platinum, and many other things. We've had some amazing trade ideas here, trading systems, but let's go ahead and get started with things. This is our backend recorder for our website subscription service for our subscribers. I'm going to start that recording right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, June 4th newsletter. Hope everyone's having a nice week so far. As you can see, newsletter is divided into 9 major sections. As far as our systems, our mean reversion systems, we still have that long trade from the SPY breakout. No real changes there. I'll keep you updated on that. We did get a scale out yesterday. System scaled out of 50% of its position, but it still holds 50% with a stop. All right. And as far as the market, as you know, on the weekend I discussed I was looking for the market to work higher. We were in some sort of coil or fourth wave consolidation. Well, we broke out to the upside. And like I said, the major indexes, S&P's up about 1% this week. NASDAQ's up about 1.8%. So we've pushed to new highs on those indexes. That said, there are now some divergences showing up intraday and some of the daily charts. So we'll keep an eye on that. We still have plenty of news items for the week. Tomorrow, Broadcom reports, and that's been pushing up higher this week. That's one of the FANG stocks that kind of doesn't report with the other ones. So we'll see how the market reacts to that. As far as news items, the big one, of course, left is the jobs report on Friday, non-farm job payroll report. Now, we'll see how that comes in. I wouldn't be surprised if that comes in weak, just given how some of the data is coming this week. So for today, we had ISM manufacturing and non-manufacturing, and they both came in weaker. And the employment change was very weak. Came in at US ADP came in at 37,000 versus a forecast of 113,000. So that is quite weak, guys. That said, market didn't sell off. Maybe there's more hope for the Fed to change course soon, but definitely we're seeing some weakening economic numbers. Again, the market hasn't cared. The market's been climbing the wall of worry, as you know. So again, the world markets continue to be quite strong. EFA, EM, ACWI. Remember, we have mechanical trade systems for those as well. So let's go and get started with things. So item number 2 below shows the index sector table, what transpired today and this week. So today, a little bifurcation on the major indexes with the Dow and Russell slightly down, while the S&P and NASDAQ were slightly up again. Mostly a consolidation day. Now for the week, like I said, S&P is up about 1%, NASDAQ up 1.8%, Russell up 1.6%. As far as the market sectors, the 21 sectors here, if you look today, roughly 50-50 up and down. So 50% down, 50% up. And no real big moves here. Most of the moves were 1% or less. And for the week, most of the sectors are up with a few financials, banks. Again, they're only down slightly, consumer staples, and utilities. Currencies, US dollar continues to be taken to the woodshed, down 0.44%, down about 0.5% for the week. As you know, we're looking for that to go down longer term because some of the other currencies look stronger. Japanese yen, euro, stuff like that. That only helps precious metals as well. Cryptocurrencies, Bitcoin down about 0.75% today, down about 1% for the week. Commodities down today slightly. The index 0.37%, though it's up 2.4% for the week. Crude oil down 0.8% today, but again up 3.3% for the week. Natural gas down a little bit today. Some strength here in copper, uranium, agriculture area. Gold up 0.64 today. 4% today, silver down slightly, GDX up slightly. But again, look at these gains for the week. Gold up 2.4% for the week, 4.5% for the week for silver, 5% for GDX, the miners, platinum up almost 4%. Okay. As far as the bond market, nice pullback today and this week so far in the 10-year, 30-year Treasury yields. Next, Item number 3 shows the economic news calendar. I already discussed most of these items, and of course the jobs report. Remember, Broadcom reports tomorrow, so let's take a look at that. So the first chart below, item number 4 is Broadcom, ABGO. So this reports tomorrow after the close, June 5th. Again, talked about this on the weekend. It broke out and it continues to move higher. It did take out its recent highs. So we'll see how this reacts on earnings. It's already quite extended, so be careful. Again, if you've already been long for a while and you have nice gains and you feel comfortable holding into earnings, that's fine. But I wouldn't be buying it into earnings. That's a pure gamble. KISS Systems been long in this, of course, and has a nice gain as well. Next, chart number 5, here's the Dow. You can see the Dow slightly down today, down 0.2%. Still stuck in this supply zone. Again, you can see the wave count I've been discussing. Off the April 7th lows, wave 1, 2, 3, 4, and eventually should make another high in a wave 5. Again, guys, as I already discussed, these wave counts, don't get too bogged down in them. This could also be broken down. What I put or wave 3 over here. And what I mean by that is this is clearly some sort of wave 3 here. It's the strongest move up. But this could be some sort of nested count where this is a smaller degree wave 3 and then you get a larger degree wave 3 over here. Be a smaller degree wave 5, whatever. I don't want to get down into that. Right now, though, we're right into this little supply zone. Hasn't taken out its high from May yet, while the S&P and NASDAQ have. Next, chart 6. Here's the S&P 500 KISS Systems. So again, there's two versions here, and I've been showing both of them lately. The version with the best stats is the one at the top. It still has the smart trailing stop at 54.93, 54.90. Let's just say round it up to 54.95. The bottom one has a much tighter stop at 57.45. Again, the top one has better statistics, but I show the bottom one in case someone wanted a tighter stop. Otherwise, KISS Systems have done a very good job, and especially since that April 7th lows, and especially the high performance systems. Next, image number 7. So this shows you two of my favorite systems. So personally, I don't trade the daily KISS systems. I like these intraday high performance systems. So the SPY 78-minute system here at the top, that's my favorite non-leveraged S&P KISS system. It went long on April 7th there. Excellent entry. And this trades up something like close to 18% from that entry. So very good trade. Stop is still right around this 568 area. But I imagine this will start moving up soon. But again, it's raised its stop all along, keeping it wide enough to avoid being hit on noise. You can see it got close to being hit back here in April, but didn't. But still keeping it tight enough to protect those profits from that entry. The bottom one is my favorite leveraged S&P KISS system. That's the SSO 60-minute system. Got a pretty tight stop here at 87.61. Went long back here, around 75 or so. So excellent trade there, and that's these are my favorites out of those. Next, duplicate chart. So let's go ahead and move on. All right, moving back to the standard chart. So chart number 9. Here's the daily S&P 500. Again, you can see the same kind of look that we showed on the Dow. This wave 1, 2, 3, 4. You can see we've actually taken out that May high there. So we're in some sort of wave 5 of some degree. Again, you can see wave 3. This could be again, various degrees of wave 3. That's why I show or 3, 5, whatever. But we are making another high here. We do have some MACD divergence. We have a little RSI divergence to be aware of. And we have that jobs report on Friday. Again, we'll see how the market reacts to that. If that jobs report comes in weak, is the market going to take it as a negative, or is it going to take it as a positive? Because the Fed may eventually step in with cutting rates. We'll see. But we are in this supply zone. We do have a little divergence forming. But, the trend remains up. Next, chart number 10. Here's another daily chart, just showing this clean uptrend channel. Here's the middle line of the channel. Another guide to watch. Next, chart 11, here's a half-day chart. On the weekend, I discussed this coil, which we broke to the upside. Now we have a little MACD divergence forming, RSI divergence. Next, chart 12, here's 2-hour view. And chart 13, here's that 15-minute chart I discussed on the weekend. We clearly busted out over the downtrend line, continued higher. Now, if you look at this little action here late in the day, kind of a little head and shoulder look to it, so we'll see how this looks tomorrow. Currently tonight, futures are essentially flat, so we'll see how it opens tomorrow. And chart 14, here's a 10-minute view. Again, after that nice run, we're now in this consolidation zone. You can see pulling back to a 61.8 fib. We'll see if we can hold that and push again, or if we break this and then move down to some lower demand zones. So let's take a look at the next chart. Chart 15, here's a 1-hour chart of SPY and triple Qs. So you can see the trend line supports here. These are liquidity. Now, if these are broken and liquidity runs, we could get a pullback to a fresh demand zones below. Those would be areas where the markets would find support. If we get a sell-off from here, breaking these little supports, these are the areas I'd be watching. Next. Chart 16, here's the triple Qs. KISS high performance daily system. Again, no changes. Smart trailing stop is 483. System had an excellent entry back there in mid-April and has raised its smart trailing stop 6 times since. Current stop is nicely over that entry. So profits are protected. Next. Image number 17. Here's daily chart of the NASDAQ, and you can see this just continue to push higher here. We have a little divergence forming on the RSI and MACD, but again, divergence is not a sell signal on its own, so we'll see. We get a little pullback here, or we rally to the highs. The highs aren't very far away, as you can see. Now, if we just rally straight up to the highs, I imagine we would then get a pullback from that point. Next, chart 18. Here's a half-day chart. No changes here, same analysis applies. You can see that divergence forming. But again, haven't really had a pullback yet. Chart 30, here's a 19, here's a 30-minute chart showing kind of a wedge pattern. Still trading up within the wedge. And chart 20, 15-minute view. Little divergence here late in the day. You can see it on the RSI, MACD, but again, we'll see how things react tomorrow. And chart 21, here's a 15-minute view. Next, chart 22, here is small caps, IWM. On the weekend, I discussed this coil pattern, which we broke out yesterday. Today, a little consolidation. That said, I do believe the Russell will play catch up to the market, especially if we see rates starting to pull back. It's highly sensitive to the bond market and yields. So if we see yields start pulling back, we could see this start to play catch up. You have sort of kind of an inverse head and shoulder here with a left shoulder here, right shoulder, head down here. And the first obvious target would be that 200-day moving average. So the Russell does interest me here. And finally, chart 23, here's a 2-hour view. This channel I showed on the weekend, we broke out of that channel, pushed higher. We're still within the confines of the channel. We got a little big supply zone up here. We'll see if we can pop up right into that. And that does it for the major indexes, guys. Let's go ahead and move on. Chart 24, here's the 10-year Treasury yield. This is the weekly chart, down about 1.15% this week. Remember, discussed this on the weekend. It's forming this big coil pattern. Next, chart 25, here's high yield corporate on the daily. This continues to work higher. Remember, this tends to lead. The S&P tends to follow high yield corporate. And it's one of the things that was a positive for the market because it was stronger than the market during this uptrend, and it has made new highs. And that is one thing that bodes well for the market. Both Steve and I think the S&P and NASDAQ and Dow are going to make new all-time highs. So, there is some divergence forming here, etc., but new all-time highs. Next, chart 26, here's the VIX daily, just continues to work lower. That said, if we do go to new highs soon, one target for the VIX would be the lower Bollinger Bands. Then I think we get some sort of pullback, so keep an eye on that. Next, chart 27, here's a 15-minute view of the VIX and the S&P. Moving on, chart 28, here's XLK Technology. Again, similar look to the NASDAQ. Not very far from those highs here. Quite strong. Again, there is some MACD divergence, RSI, but that is yet to produce any meaningful pullback. One thing, guys, I want to point out. Notice the MACD. Notice how far above zero it is. Generally, when the MACD is like that, any pullbacks you get are generally shallow. So that's usually not indicative of a big top. Just maybe a short-term pullback, something like that. So that divergence on the MACD to me isn't that bearish. Just, maybe we get a little pullback soon, but nothing that large. Next, chart 29, here's XLF Financials. Down today slightly, no changes here in the overall pattern. Still around its 20-day moving average. Next, chart 30, here's Transports. Still stuck in this range. Got pretty close to filling this open gap. Overall, the transports have been quite weak, but as you can see, below its 20-day moving average, below its 200-day moving average, etc. Next, chart 31, XBI Biotech. Finally breaking this downtrend line this week. Now we'll see if the broken downtrend line can hold as support. This tends to move with small caps, so if small caps start to rally, that'll help the XBI Biotech area. Next, chart 32, XLE Energy. Now this still in this uptrend channel-like pattern, but nice pullback today. This is still looks quite vulnerable to me. You can see the pickup in volume today, the reversal off that 50-day moving average. Next, chart 33, EFA. That's World Markets. Continues to be strong, continues to ride its 9 EMA up, which it's done since early April. Again, the epitome of a V pattern. So super strong. As you know, I am long-term bullish on emerging markets, world markets over the U.S. markets. Been showing that for quite a while. There's a little divergence here for me. You can see the 3 divergences now in the 5 RSI. So just keep an eye on that. Again, nothing's changed here. We do have a little MACD divergence now. So it is getting quite extended here. Be careful. I would not be buying any new positions right now. If you're in it, it's fine. Just manage it with a stop. We do have a system on the KISS system area for EFA, so you could follow that. Next, chart 34, here's EEM, that's emerging markets. Again, talked about this being a cup and handle like pattern. You can see nice move up this week. Now testing the trend line of the pattern. Next, chart 35, here's the EEM SPY ratio. I also have a ratio for the EFA relative to SPY, but again, you can see how this gave a buy signal a couple months ago. And my thoughts here are that emerging markets have underperformed relative to SPY since 2011, but that I think we are witnessing the beginnings of a macro trend change. So again, the S&P is not going to lead forever, guys, and I think that's why I wanted to add focus to these world markets, because I think, while the U.S. markets are doing well here lately, I do believe we're going to start seeing them underperform the world markets. And that's why I added them to the high performance KISS section so you can participate in those. Next, chart 36, here's yen. That's the triple leveraged ETF for China, as Trump would say. Nice update today here. We also have a mechanical system for yen on the website. So chart 37, here's the statistics for the yen high performance KISS system. We use a 130-minute system. That's basically 3 bars in a day. You can see it's up about 50% this year off 2 trades. Buy and holds up 39%, which is still very good, but again, this is better. And last year would have made almost 92%. 2023 would have made 44, 45%. Buy and hold, you'd have lost 54%. So average number of trades, about 4 trades a year. That's not very much. Average annual gain, for this system is 55.8%. Look at buy and hold. Lose money. Why? Because more than half of the years are down years. So absolutely no comparison. Great system. It's on the website in the High Performance KISS section. Now moving on to commodities, chart number 38, DBC. Here's the weekly chart, up 2.4% for the week. Again, otherwise, like a broken record, still remains in this channel that it's been in for 2.5 years. Energy is building. One day it will break from this channel, and when it does, I expect a really strong trending move. But we'll monitor it until that time starts. Next, chart number 39, here's the daily chart. Again, as you know, a few weeks back in May, stalled at that resistance, which was previous support, became resistance. So still just chopping around. We're chopping around higher, but needs to clear this resistance area. Next, chart number 40, here's crude oil. Slightly down day to day, but we do have a higher low. Remember, we had a little double bottom there in early May. Little higher low there in late May. Big resistance is 65 still. That was previous support. Was tested once as resistance in March, or in April, I mean. So that's the area it needs to clear. Next, chart number 41, UNG, natural gas. It's bounced back this week, but otherwise just kind of chopping around here. The easy trade was back in April off that trigger candle, but right now it's just chopping around. I don't have any interest in trading this. Next, chart number 42, copper. Up nicely this week. Again, perfect rebound off the retest of that coil, which I discussed on the weekend newsletter. So again, that's some of the lower risk trades, guys, in technical analysis, is the breakout and in back test. If you can catch the breakout at a good price, great. But if you miss it, an actual back test of a broken trend line is your much, much better risk to reward trade, because you get an uber tight stop, and that would have been a great trade. Next, move into the crypto, chart number 43, Bitcoin. Again, down this week a little bit. Here I had a little trend line to monitor, so we'll see what it does. It is down this evening a little bit. Kind of has a tiny head and shoulder look to it, but we'll see what it does. Next, chart number 44, Ethereum. No changes here. It's still in this ascending triangle type pattern, so we'll continue to monitor that, but still within the pattern. Next, chart number 45, ETHU. That's the 2x Ethereum ETF, still in the same pattern as well. I own a little bit of this. I have a stop just below that 58.25 area. Next, chart number 46, US dollar, down 0.4% today. Still remains weak. Now, if this does make another low, we do have a MACD divergence potential here. Next, chart number 47, US dollar on the weekly. Again, you can see the last rally into the 9-week EMA a couple weeks ago stalled right there. There's a bigger demand zone down in this range. Next, chart number 48, Japanese yen. Talked about this potential cup and handle forming here. You can see right now a little coil forming within the pattern to watch. And that said, let's move to precious metals. Chart number 49, gold. Gold rallied $100 on Monday, broke over the downtrend line of this coil pattern, and since then it's been consolidating, but this broken downtrend line is now support. Again, we had a textbook ABC pullback into here. Now we'll see if this puppy can rally, maybe even take out those last highs. I was calling that a blow off, but we'll see, guys. Next, chart number 50, here's GLD, that's the ETF. Again, same pattern. Next, chart number 51, silver. Also had a huge pop on Monday. Since then, it's consolidating right around this trend line. And chart number 52, here's SLV, the tradable ETF, same pattern. Chart number 53, here's silver on the monthly chart, still within this larger supply zone, which it's been stuck in here for many months. But if we can clear out this supply, the next supply is way up here in the 40s. Next, chart number 54, platinum. Up nicely this week, up 3.9%. Last week was a consolidation inside week. The previous week had a monster breakout from this coil pattern. Remember, I love platinum, long term, not just from a technical perspective, but from a fundamental perspective because of the supply demand imbalances. There's currently a 1 million ounce demand more. There's a demand for is 1 million ounces over supply. So eventually that's going to lead to higher prices fundamentally. Next, chart 55, here's PPLT on the daily. Again, it was quite extended the previous week. Pulled back though just a little bit, and now it's popped once again. Look at those volume bars, guys. Looks great. Next, chart 56, here's SPP. That's 50% platinum and palladium. I like them both. So I talked last week about this bull flag forming. You can see the volume there. And nice move up out of that. Next, I have platinum on the website in the high performance KISS system and in the standard area, but here's the high performance KISS system. Again, average annual gain about 20%. Average annual gain for platinum is negative. Why? Because look, more than half the years are down years. So again, this is a way to participate in the new platinum bull market using the KISS systems. Next, chart 58, GDX, the miners. On Monday, this had a pop to a new high after that ABC textbook pullback. Man, nice move. Now, so far, since then, it's been consolidating. Next, chart 59, some of the trade ideas I had in the precious metals. BVN, remember it was in this coil pattern I've been showing for a couple weeks. Popped out big on Monday, and it's up again. So, nice trade. Congrats if you caught that. Next, chart 60, here's Newmont. Had a very similar look to GDX. Gave a nice pop. Just an absolute textbook ABC. Next, chart 61, Goro. This is that weekly precious metal I've been following. I like the weekly chart here, the base forming. And it is up 21, almost 22% this week. Still hasn't cleared out this base trend line, though. Chart 62, here's the daily chart of Goro. You can see the nice move up this week. Needs to clear this downtrend line, as you can see, but it's been a nice percentage move. Some others I've been showing. Chart 63, SIL, that's the Silver Miners ETF, and look at the strength this week. Look at that volume. MACD super strong, no divergence. You know, it is a little overbought. You can see on the 14 RSI. So, but, you know, a pullback is likely to be bought. Next, chart 64, SILJ. Now that's the Silver Miners Junior ETF. So it's the junior silver stocks. Showed this on the weekend as a kind of a large cup and handle. Breaking out this week, up 10.5% on expanding volume. Chart 65, here's the daily chart. Look at this move. Look at the volume patterns. Really nice. Chart 66, SA. That's another gold miner I issued. This little basing pattern, you can see it popped over that resistance today. All right, moving back to other trade ideas. We've had some nice ones here. Chart 67, AMD, popping over that little trend line here this week, as I commented on the weekend. Chart 68, NVIDIA, continues working higher. Remember, our wave count suggests eventual new all-time highs here. Chart 69, Amazon, still kind of struggling here, but to me, looks okay here. It's kind of coiling actually around these moving averages. Next, chart 70, TSSI, long idea of ours from yesterday. Look at that pop today, up 13.4%. Excellent trade. Nice cup and handle breakout. Chart 71, BBAI, been on the watch list since the weekend. You can see breaking out over the trend line today on some expanding volume. Now, this isn't a stock to marry, guys. You know, don't put a ring on it, but, you know, you can trade it. Next, chart 72, FSS. On the weekend, I showed this setting up as a coil pattern. Look at this. You had the 20-day, the 9, popped out of the coil yesterday, moving up again. Great trade. And we had it as a trade idea way back here, guys. So I talked about how it was setting up again on the weekend. Nice pop. Next, chart 73, TNGX. One from Steve last night. Nice pop. I loved the volume patterns here that were present. Nice pop. Charber 74, NXE, another one. This was a support backtest play I discussed on the weekend and on Monday. Nice pop from that area. Look at the volume. Looks good. Charber 75, Oklo was a tight little coil that broke out this week. Looks good. Still looks really good. Look how the moving averages are all bunched up here. The ribbons coiled, pinched, trying to curl up. Charber 76, Oklo was a beautiful long we had back here in early May over this trend line. Popped from like 27.50 all the way to 58. Hell of a trade. But I said watch for a cup and handle pattern. You can see it's pulled back. It appears to be trying to form a handle on a lighter volume here. So this still looks pretty good. Charber 77, ASTS, big pop. It broke yesterday. Nice wedge pattern. Huge pop today of 14%. Great trade. Charber 78, Daku, breaking out over the trend line we've been showing. Charber 79, IONS, one from Steve yesterday, popped up today, tagged its 200-day moving average there. Charber 80, XYZ, talked about this breakout and back test being a low-risk trade, and nice pop over there. Some others, Charber 81, Datadog, finally breaking this little trend line today. Now, off the highs, but still looks fine to me, guys. Volume's good, etc. I like to see that. I own some of this still. Charber 82, NTGR, Netgear. Been showing this. Hasn't broken out yet. Still valid long. And Charber 83, TEM. Still a valid long as well. So there you go, guys. Again, we'll see what happens tomorrow. We are a bit extended. We'll see how the market reacts on the jobs report. And as far as YouTube, guys, I appreciate comments, likes, etc. The one thing I want to ask you guys on YouTube, if you don't like the video for some reason, please don't hit a downvote. You know, all we're doing here, we're just analyzing the markets, technical analysis, not saying anything offensive, not saying anything political, which gets people up in a roar. So I understand these long form technical analysis newsletter videos can be kind of boring and are not for everyone. But if they're not for you, don't downvote the video. You know, just move on. All right. Again, I appreciate all the support, guys. Have a great evening. Take care.